3, 2, 1. Hello, hello, hello.
Welcome.
How's it going, Shalaunda?
Hi, Dylan. Everything is well. How's it going with you?
Good.
Tell me something good.
Something good. Well, I just celebrated my birthday this weekend,
Look
which
at
was
that.
nice. Got to hang out with a lot of my friends, have a good time, not focus on work too much, but just enough. The right amount.
Listen, you deserve it. You've been working, so enjoy your birthday. Don't let anything, take you away from enjoying your time. Just with friends and family.
Thanks,
Celebrating you.
How was your weekend?
My weekend was a little bit busy.
A little bit busy?
Yeah, but it still was a good weekend.
There you go.
Right? Preparing the kids for school.
Mm-hmm.
But it was enjoyable at the same time.
Good. School is back in session.
School is back in session.
Kids are back in school. Which I was even just telling a couple of agents in the office and you as well. It must be really nice to just have a little bit more structure.
Oh yeah, absolutely. For me, structure is important.
Yeah.
I grew up in a very structured environment, and I guess it just kind of spilled over to my adulthood. So having that structured routine, it just works better for me.
That makes sense.
Yeah.
That makes sense.
And so when things are railroaded, it's just like,
And that's what summer can do to you, especially just like kids. They have their own schedules at that point.
Yeah.
It's tough.
Well, you know what? This summer for me actually was kind of a bit more chill.
Was it?
Kids are growing up, right? My daughter was supposed to play lacrosse, but we didn't get the location.
Mm-hmm.
And so when I reached out to the organization, they only had email information, and no one ever emailed us back.
Oh.
So we didn't have any phone number or anyone to contact specifically.
Mm-hmm.
So they were just, the kids, this year they just chilled.
Good. And that's what you should do as a kid, just relax, especially the summertime. Because one thing I realized getting into my adult era.
What's that?
There is no summer. There's no summer vacation.
Yeah. I don't know, it was something new for us though.
Yeah.
So usually.
Just chilling?
Yes. Usually every summer they're out doing something.
That's fair.
And so this was the first summer that they did like absolutely nothing, and we all enjoyed it.
No, it's nice.
Yeah.
Especially because during the rest of the year it can get chaotic as well, right? Because school, there's still like after school activities, there's still a million things to do.
All right, Dylan, now you're starting to stress me out.
I'm sorry. Okay, back to the regular scheduled programming of it all. But yeah, and it's even starting to feel a lot like fall. The weather.
Oh my goodness, I enjoyed the weather when I woke up this morning.
Yeah?
Yes.
See, I don't like when it's too hot, and like the weather where it's like, when I woke up, I was outside, it was around like 57 degrees outside. I'm like, this is nice.
This is it. I love it.
I'm not sweating,
right.
I'm not freezing.
I don't need the air on. Now the fan still stays on.
And the fan should.
All
fan should. It was so funny. So from one of my birthday gifts, I got my boyfriend got me a cooling blanket because he likes to call me a furnace. He says every time I hug you, I'm like, you're hot. I'm like, I don't feel that hot. But he's like, you need a cooling blanket.
That's because you have a warm heart.
I'll take it. Thanks, Shalaunda.
It's better than a cold heart.
Oh, 1,000%.
Indeed.
1,000%. But I'm somebody who I'd rather be cold than hot.
Oh yeah, absolutely. Listen, I tell people, and this joke, right, that I make, and it might be kind of corny, but it is what it is, right? I just try to be a good human because I heard that there's a place that is very hot in the afterlife, and I don't like heat.
Do not do well in the heat.
I know very well that that's not where I'm aiming to go. So
Shalaunda is staying cool as a cucumber.
I have to.
I love it.
I don't like the heat. I'm a summer baby.
I'm a summer baby too.
Yeah.
I love a good summer.
See?
Love a good summer. So let's get into the episode?
Let's jump into it.
So we are on episode 2, season 2.
Yes, indeed.
Of the Pure Michigan Properties podcast. Shalaunda, what are we going to be talking about today?
You know what? We're going to piggyback off last week's episode a little bit. Not too much, but last week we were discussing market trends and buyer activity and the advantages that both buyers and sellers have. And today we just want to incorporate more information that is valuable to buyers now buying in this market, where they can use these methods to pay off their mortgage sooner. So let's get some money back
100%.
into your pocket.
100%. So speaking about the money aspect though, right? So when majority of people who are buying a house take out a loan, right? And I don't think a lot of people understand how that loan payment process works.
Well,
every
let's tell
time.
them.
Let's talk about it, right? Let's unleash the truth of what's going on, because I feel like even like my clients, they don't understand when they're making that mortgage payment every month. How does that work? And because for a mortgage payment, you have your principal, but you also have interest on top of that.
Correct.
Interest is the money that the bank charges you as the individual to borrow that money to go buy a home, right? So in the very beginning, what happens is you are going to be paying majority of interest in the very beginning of your loan period.
Oh, that sucks.
Doesn't it?
Right?
But how that works is the method or the thought process behind it as a bank. This is how they think.
Oh yeah, let's talk about it.
They will protect their money against anything, right? So for them, they're like, well, if we're giving you, for example, $250,000, that's not just a dollar, that's a lot of money.
Let me ask you this. Would you lend $250,000 without any type of incentive or just security?
100%. I no, 100% not. I would not do that.
I was gonna say.
You're like, wait, what?
Let me borrow $250,000.
No, I don't even have $250,000 to give out. But
oh man,
I wish.
That was good. I had to try you on.
But they're like, listen, if we're gonna give you this much money, you have to have some skin in the game as well.
Right.
Right. So they're saying on their end, if we're going to be giving you, call it $250,000, that interest you're paying, majority of that interest is you're paying that up front. So like the percentage of it all, you're paying a higher percentage of interest than you are your principal. Yeah. As you're making your payments and you're working through the loan process of paying off your loan, you're going to start to see where it's going to flip. Now, as you're getting into the loan, and I would say halfway through plus, that's when you're starting to pay more principal than your interest.
So Dylan, what I'm hearing you say so far is that initially when a buyer takes out a mortgage, that when they're making their monthly payments, the financial institution is collecting interest first. And so that portion of the monthly payment that you're making, only a smaller percentage is being used towards the principal and whatever else, property taxes, insurance, yada yada yada.
Correct.
Okay. Yep.
Correct.
We're all on the same page.
Yeah. So in the very beginning of your loan, and when you close on a house, you should also get something called an amortization schedule, right? Correct. This is the schedule of how your payments are going to work, and it breaks down the whole payment process of what that loan's going to look like, so that you as the buyer have no questions about how this is supposed to work.
And so let's bring this up, right? So an amortization schedule can look different for certain buyers, depending on if you have a fixed rate or an adjustable rate mortgage. So sometimes it is best that you also understand as a buyer what type of terms you have.
100%. And I think that's where the loan officer who's coming into the picture when you're buying the house,
they should be covering.
They should be. They should be covering what's the difference, right, between a fixed rate and an adjustable rate. Fixed rate stays the same. Do not have to worry. Adjustable rate fluctuates.
Yeah, and it balloons towards the end of the loan as well. Yeah.
So that's just something to keep in mind as well.
Sure.
Right? And that's the beautiful thing about loans is there's different options for different people, because if everybody was the same person, then we would only need one product. Everybody has a different situation, right? Everybody has different goals, different dreams.
Absolutely.
Different aspirations.
And then if there was only one type of person and just one type of situation, I think life would just be a little bit more boring.
I think so too. I think so. Imagine we're all the same. Ooh. Yikes.
Then I would never have the nickname like no other.
Exactly. That's so true. Yeah, you couldn't use that tagline anymore.
Yeah, well, anyone can use it, but yeah.
That's fair.
Yeah.
One thing I want to talk about that I think a lot of people don't understand with their mortgage is a way to kind of speed up the process of getting to more of that principal rather than paying that interest.
Ooh.
Is when you are making your payments.
Yep.
Something that you can do that I don't think a lot of people understand is you can pay a little bit more on that mortgage payment.
But Dylan, why would I want to pay more?
Because it cuts down that life of the loan. So let's
How
say
much more, Dylan?
That is a great question, Shalaunda. I have some stats for you.
Okay.
So let's say you're on a $300,000 mortgage. 6%, a 30-year loan means you're shelling out about $350,000 in interest. When you just took out a $300,000 for the mortgage. Right? That's more than the house itself.
Yeah.
Pretty crazy to think about. But let's say you go for 15 years instead. Your monthly payments are definitely going to be higher because you're cutting down the length of that loan.
Sure.
But as far as interest,
$180,000
in interest
compared to
$350,000.
Yeah.
Right?
Yeah.
So you really just cut it. So as much as your payment's higher, you're really saving a lot more on the back end.
So let's say someone decides to opt for those lower payments, maybe with that lower term, somewhere between 20 to 30 years instead of the 15 years. Does this method that you speak of, the strategy, how do we still cut down on the loan amount?
100%. So
or time.
You want to cut down on that schedule?
Yep.
Extra payments. That's something that you guys can do. So let's say back to the $100 we were just talking about. Let's say you cut years off that loan, right? If you do, or to make life a little bit easier, sometimes this works better for some people. You could do bi-weekly payments.
I love that. You know what, Dylan? I'm glad that you mentioned that. Usually in my buyer's consultations, that's something that we discussed, is those bi-weekly payments. Where you're still making your same monthly payment that the lender has specified, but instead you're cutting those payments into two.
Exactly.
That way you're kind of buying the principal and the interest down at the same rate.
Exactly.
Yeah.
And especially because I feel like it just makes life so much easier. You just schedule it and you're good.
I think so too.
In a way, it's like setting and forgetting it.
Yeah. Absolutely. And that's, everyone is not able to, but I think that's the option that I will opt for, being a buyer. However, whichever method works, because the first strategy, even if you, like you said, were able to make an additional $100 payment here and there, you're still saving tons of money in the long run.
100%. I think we think about it as a short-term gain, but really if you think about the long-term aspect of it, again, it comes back to everyone is individually in a different circumstance, different part of their life, right? So that's where when you're speaking with your loan officer, these are the points you should be bringing up. Would it make more sense for me to make bi-weekly payments? Does it make more sense for me to pay a little extra on that mortgage payment so I can cut it down? What makes the most sense and how do I win?
And so, would you think it would be important to even add your financial advisor to the mix of things.
Oh, for sure.
Yeah.
It's a huge financial aspect, right? So I would want to add my financial advisor to that conversation.
Okay.
To see what's the best.
And knowing that we have 52 weeks in a year, sometimes when you're on a maybe bi-weekly schedule, payment schedule with your job, then there's a couple of months, and I think it's maybe like 2 or 3 months during the year's duration, where I can't remember, you get like 3 checks instead of the bi-weekly 2 checks per week per month. Why can't I get
2 checks per week? I'll take 2 checks.
I'll take 2 checks per week too. I can't get my thoughts together here, but where you'll get the 3 checks per month instead of the usual 2. Even if that's something that a buyer can contribute, right? That extra payment in that manner, then that's a good method as well.
100%. I mean, there's definitely, I call it like cheat codes.
Why did I just go blank? I just went blank, you guys.
You're so in the zone.
I was into it, yeah.
You were so into it. I saw it. I saw it in you.
I don't know. Okay. All right.
But realistically, yeah. So either making those bi-weekly payments.
Yeah.
Or paying a little extra on that mortgage payment. Again, $100 a month.
Yeah.
Right? That's such a cheat code to cut down that length of the loan. But no one talks about that.
No one talks about it. I don't know if lenders are having those conversations, because at the end of the day, they really do benefit from, the longer term payments and things like that.
Right. Because they're attached to that loan. They're like, we want to keep that loan going.
Absolutely.
And I get it. Like, that's their business. But our business is to educate our clients.
Absolutely.
And educate the world. And
we love to do that. And listen, I think that's the whole purpose that we're here with the podcast, is so that we can educate our audience as consumers, because we're consumers as well.
Right.
So anything to make your life easier, bring value, help you in your journey and moving forward in life towards that freedom that you're looking for.
100%.
Yeah.
100%. So I mean, realistically, yeah. Back to the whole schedule of it all. Like, right. So think about it. Paying majority interest in that very beginning.
That would hurt my heart.
But that's the bank saying, listen, you're taking out our money. Put some skin in the game.
Yeah.
Right. Again, back to $250,000 being a lot of money. As a bank, I'd be like, yeah, you got to pay up first.
Yeah. I got to see my return first. I can't get mad at that.
I can't get mad at it either. But again, it's just one of those things I don't think a lot of our clients understand. That those beginning of your mortgage.
Yeah.
Majority of interest. And then it flips. It really does. You'll start to see it kind of start to balance out a little bit more, like 50-50.
Yeah.
And then it skyrockets to where now you're paying off for that principal.
Yeah.
So that's really how the whole schedule works. It's really simple, but it's something that we just don't talk about.
No, we do talk about it. That's why we're here today.
Exactly.
We're here. We're talking about it.
Exactly.
Now, are your other realtors talking about it?
I hope so. I really hope so.
Well, I'm going to turn the mic up here. Because just talking with even buyers, second-time buyers, they just didn't know. It's a lot that they didn't know. I believe that also contributed to the housing crisis, right? 2008 and things like that. Those lenders, they were not being upfront about, those amortization schedules.
And that's why there was so much regulation put on after.
Correct.
because, like you were saying, no one was educated at that point
Right.
about what was happening.
There was a lot of predatory lending going on, and a lot of buyers, their payments just ballooned at the end, and that just made it unaffordable for them.
Mm-hmm.
And so talking about these options up front is very important.
It makes the client more educated, and it makes them more of a confident decision maker at the end of the day. That makes the most sense for them and their families.
And I love that. And here's an opportunity spin, right? If we dive back into the conversation, once you're able to start kind of balancing your payments between your principal and your interest, then you can start really utilizing that equity in your home. I think that's a smart time to start utilizing some of that equity if your journey is to go ahead and procure more property and things like that. I think that's a perfect acquisition strategy.
Or even just do upgrades in the home, updates, right?
Yeah.
Take out a HELOC.
Yeah.
And use that money to upgrade your home.
Yeah.
A lot of people do that nowadays.
Add value.
Once
Sure.
you get that once you start building that equity in your home,
Yeah.
I think I'm going to say this on the podcast because I want to remember this. That should be a conversation we have about equity.
Oh yeah, of course.
Okay, so remind us, audience.
We'll have that coming
Coming
soon.
Coming soon, we'll
Yeah.
be talking about equity and really the best ways to use that equity.
I love it.
But that's the cool part is once it starts to get to that balance point or it really starts to flip to where you're paying more principal than interest, that's when the fun begins because that's when you're building up your bank account.
Right.
I was telling one of my friends, I'm like, at the end of the day, when you're making that mortgage payment, you're basically putting that money into your own bank account that you'll be able to use later off in life.
Oh sure.
When you're renting, you're putting it in someone else's bank account.
And I can tell you for sure, they're not offering that money back.
They're not going to give you that money back. No returns.
No. And that's why I always kind of bring up the accounting principle and factor. Home ownership is truly the route to freedom. And then
Creates so much opportunity.
Yes. And when you start to sit down and understand your portfolio, it's an appreciating asset over time. All right. And so it's one that can be liquidated and leveraged.
100%. That's the cool part.
Yeah.
And especially, it's something that you could liquidate pretty fast.
Right.
Pretty fast. I mean, obviously some houses are easier than others to sell.
Sure.
But it's one of those that really, as long as you keep up with the house, you'll do pretty well.
I think, yeah. No, I'm sorry. Like, let me make sure that I say yes. Like, that's a definite yes.
Yeah.
Yeah.
I mean, obviously there's people who don't make their money back, but also it's probably because they didn't put the work back into the house.
Fair enough.
Or they buy and they sell within that same year. That's pretty tough.
Unless you're an investor and you have a flip formula that
I guess. I mean, I'm just going to throw out an example. I had a neighbor by my house. They bought and they sold pretty fast. Like that same house. They lost money off of that.
Oh, sure.
So that's just an example. But yeah, on the flip side.
Yeah,
speaking of flippers.
Flippers.
They do pretty well.
Yeah. And so, all right, you all, we've identified 2 methods to help put money back into your pocket sooner when it comes to paying off your home. And so if we were to take a step back, if you were to add, a couple dollars extra to your payment, call the bank up and says, hey, today I'm making an additional payment towards the principal balance of my loan that'll help you pay off your mortgage sooner rather than later, cuts down on that time. But then also we discussed making those bi-weekly payments. So you're paying the same monthly payment identified when you sat down and closed, or whatever the case may be, by that same due date. So when we say bi-weekly, you still have to pay it on or before the due date.
Oh, for sure.
Right.
Yeah, don't forget that part.
Let's not say, hey, Shalaunda and Dylan tell me to pay bi-weekly and it's after my due date. No.
We are not telling you that.
On or before the due date, you can split your payments. And
thank you so much for clarifying that.
Oh, absolutely. I got your back, though. Got your back. I got your back.
We're getting some phone calls saying, what just happened?
And then you start defaulting on your mortgage. No. On or before.
On or before.
Exactly.
And I think that this is something also a lot of questions. It's kind of on the topic of the loan, but not on the schedule. Actually, it does talk about schedule.
Yeah.
Something that I get a lot of questions about is, let's say I buy a home today.
Mm-hmm.
Today we are filming on August 25th.
Okay.
When does that first mortgage payment actually start?
Oh, you know what? That's good, Dylan.
I think
so.
I think most people think, oh yeah, if I'm buying a house in August 25th, oh, so is my first payment due September 1st? Or is it at the end of August? Both answers are actually not
Incorrect.
Incorrect.
Yeah.
Shalaunda, explain how that first mortgage payment works.
So the first mortgage payment, when you sit down and close, those fees that you bring to the closing table pretty much covers that first month.
Mm-hmm.
And so you have that next cycle. They kind of give you until the next month. So
correct.
Today is August 25th. You wouldn't make a payment until October.
Correct.
Yeah.
So, like Shalaunda, I think you explained that beautifully. When you're closing on your home, you're basically paying all the fees up front for that between August. I'll go back to the example of August 25th and September. That's part of your closing costs.
Mm-hmm.
But the banks will give you a full month, basically, that you don't have to pay.
Mm-hmm.
It's a nice little gift they give you, basically. But, so it works that you have a full month, and then after that full month happens, that first day, so for August 25th, you have to have the full month of September.
Yep.
That's where everything gets pretty much set, squared away. They get the whole schedule ready to go. And then October 1st.
It's when you start, it becomes official.
That's when you start making those payments.
Yeah.
So it's kind of nice, especially because a lot of my clients are the first-time home buyers and they don't have a lot of cash, right? So it gives them that little grace period to kind of pad their bank account ready to go, because I'm not going to say, or not going to lie, closing costs can get expensive.
Sure.
It doesn't have to be, but it can get expensive depending on what kind of home you're buying, the loan you're taking out, when you're buying it.
Mm-hmm.
There's a lot of factors that go into what your closing costs are going to look like.
I would like to see more buyers come to the table and already have like a savings plan or a contingency plan where they can have, somewhere between 3 and 6 months saved up in addition to the closing costs.
Mm-hmm.
Just so that when they start to, once they close and start to make their payments, that they can, from the beginning of their journey, they can start making those additional payments.
Right.
I would love to see that.
Right, back to, the whole bi-weekly.
Yeah.
Or paying a little bit extra.
Yeah.
That's why, it's so important that you are financially ready to buy a home.
Yeah.